Following the latest round of stress test results, the Fed saying all 31 banks would be able to withstand a severe recession scenario. Goldman Sachs shares taking a hit. Analysts are saying that the bank is going to have to set aside more capital based on the stress test. We want to bring in Devin Ryan. He's JMP Securities Director of Financial Technology Research. Devin, real quick, before we dive in specifically into Goldman, I just want to take a step back. When you take a look at the results that we did get out last night, did anything surprise you?
At a high level, it wasn't overly surprising. We figured, all banks would pass, and really, you go into the stress test and you hope that all banks are going to pass. And really, then the question is the nuance around that, and then what that implies for capital return, which is really what investors are focused on. I think we all know that banks have built a lot of capital in recent years, and so I would say you look at the banks that passed. 10 were slightly better than where they were last year, and 11 were slightly below where they were last year. So they're really small nuance around the edges versus some major surprise to your question.
So let's talk about the Goldman of it all then. That bank's capital strength, that is, for our viewers, that's their solvency, their ability to withstand financial distress, that declined. What do you think was the single biggest driver behind that?
Yeah, so it declined a little bit, and not overly surprising. If you look at this year's test, it wasn't dramatically different than last year, but the pressure from kind of stressing the credit card portfolio was a little bit of a drag for them. And so, I would point to that as kind of one component of it. Again, these are really small dynamics, and we're much more focused on what this all implies for capital return. I think from a capital position, they're still in a very strong position, as we saw in the test last night, even these very severe scenarios. But the question then is, what does this imply for how much capital they can return? And we'll get an update on Friday, so tomorrow, from all the banks, and then happy to talk about this. But I think the bigger question is around where capital rules go, and that's really related to Basel III Endgame, which is a whole other conversation. But that's going to be kind of over the next couple of months where we get to the final rules there.
Yeah, Devin, let's talk a little bit more about that, because in the recent note and your reaction note, you're saying that we should be placing maybe a bigger emphasis, or maybe that is more important ultimately to the bank's health here in the future. Talk to us just about what you think we could potentially see from that, given that there are certain, uncertain factors or uncertainty, because we don't exactly know what exactly Basel III Endgame is going to look like.
Right, exactly. So the initial proposal came out, and I think made a lot of us and some of the bank executives a bit nervous in terms of where the starting point was for that conversation. And what we've seen in recent months is that it does appear that it's going to get softened. And there's even some press reports earlier this week that the Fed has been floating, a much softer proposal for the final rule, which would really be a positive for the industry. So I think everybody's just waiting to see what exactly that looks like. And then on the other side of that, then I think companies will have more confidence to really more broadly accelerate capital return. So of course you need to get through the stress test and have reasonably good results. I think we got that last night. Again, there was some nuance on the plus side and some nuance on the negative side. And I think you'll see probably modest acceleration in capital return in the announcements tomorrow. But then you'll see a bigger catalyst on the other side of Basel III Endgame, in the expectation that it does get watered down, which is everything that we're reading about right now in the press, at least.